This is the Friday, September 12th, 2014 version of the Market Plus segment. Joining us now is Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Mike.
Let's get right into it. On the show, you talked about how there's the potential out there for 177 to 178 national U.S. corn average. That's going to catch a lot of people off guard. And Andrew in Northwest Iowa is curious. He's from Twitter. He's asking, are there any global factors that could bring cash corn back to 4.25 by next July? What are your thoughts?
No. Well, the Ukraine's offering corn. They've got an abundant supply of corn to sell. It's offered well under the U.S. prices. Argentina has corn to sell under U.S. prices. Brazil has corn under U.S. corn prices. We're not competitive at the Gulf at all. That's why a lot of people were surprised this week when the USDA increased their estimate of corn usage, corn export sales. Now, maybe Argentina and Brazil will be off a little bit on their planted acres. Not maybe, they're going to be. So they aren't going to have quite the quantities to sell. But still, it takes a long time to sop up an extra, 300 or 400 or more million bushels of corn that we've got. And so I don't see, and worldwide wheat demand supplies are way up. China's got it great now. It was reduced, their crop was reduced a little bit in this USDA report, but they're in the process of building 50 million metric tons of storage to store all the corn that they're going to have. So, you know, this MIR 162 mess we had, the reason for that was they've got too much product. So I don't see anything globally coming along to help that out. Now, now ethanol, you know, you look at that side. Okay, they bumped that a little bit. We've got an ethanol usage number about the same as what last year was, which is probably about right. You know, the margins are good. There's plenty of corn, but we're not building any plants, so I don't see how that goes up much. And then livestock numbers, obviously we've got expensive livestock prices because there aren't any livestock out there, and there's plenty of feedstuffs. And you've got the DDGs we were selling to China, that's backed up on us. So you've got all these DDGs that we're getting exported that are going to come in and compete with corn for livestock feed too. So I guess push the bearish supply side. The demand side doesn't look so great either when you turn around and look at that. So I guess I'd be happy if I got 3.25 rather than 4.25
next July
this winter.
Yeah.
And then on top of that, you got all these transportation issues that we talked about that you can't get. Well, you can get the rail cars, you just can't get a locomotive to pull them around anywhere. So what's going to happen when all that grain gets piled up and you go shooting into the elevator, pulling your little wagon full of corn, and they say, sorry guys, we can't take your corn unless you sell it to us. I think there's the bottom line of that little story is that the basis is going to potentially be a problem, which is going to make it even tougher to get to that 4.25 cash corn that you're talking about.
All right, so it's going to be, there's headwinds
a
facing the
lot of
corn
headwinds
market for the coming years.
For sure.
Now, and that kind of leads right into Matthew's question, and it seems Matthew in Windsor, Illinois from Twitter, seems like he's maybe on the same page as you. He's saying assume a total 2014 total crop of 14.5 billion bushel. So kind of right at where we'd be with that 175 to 177.
Yeah.
What price does the market need of DEES 15 corn for farmers to plant 90 million acres this next year? Are we going to see 90 million acres, do you think?
Well, he could probably answer that better than I could, but because I'm not sure what the farmer's decision matrix is going to be here as we go into the winter. When you have the situation where you have to switch from profit maximization to loss minimization, how do you make that decision? Do you just go cheap, go beans, don't plant any corn, or do you say the only thing that can bail me out of this is that I plant corn, it yields like crazy, and I get it sold decent? And that's my way of being defensive. Now, some are going to say I'm going to not fertilize, I'm going to get the cheapest corn seed I can, cut my costs to the bone, and they're going to try to survive that way. And those decisions are going to have a big impact on how many acres of corn are planted next year. So I'm not being a wise guy. I really think the farmer is probably in a better position to answer that question than I am at this point.
And as of today, we're not seeing, you say it was pushed up against $4 this week from time to time, but D's 14 isn't too terribly different from where D's 15 is today.
Right.
Or vice versa. I guess I got them switched in my head.
That's why I said on the show, if you're going to switch to beans and you think that's the way to go, $10 beans could be pretty darn attractive. So if you're going to do that, make sure you make the sale. Don't just plan them and then hope prices will be decent when you get there, because they're probably not going to be.
All right. Now, one of the topics we didn't have a chance to discuss on the show was the cotton market, which was a bright spot this week, up close to $4, $3.60 some cents. What's driving that? Are we seeing?
It was the one USDA report that was friendly. Acreage was down, yield was down, total production was down, and that's what drove cotton up. Now, the negative on that is demand is also down somewhat, and a lot of this demand is Chinese driven, and they've got relatively good supplies of cotton. That's why you've seen cotton prices drop really through the summer. But we're up almost close to $5 off of the low. 68.50 is kind of viewed as resistance. If you overshoot that a little bit, you could get to 69.50. I think cotton will have trouble, really struggle once you get up into those kind of levels. So we may have gotten most of what we're going to get this week.
Okay. Maybe make some sales if
yeah,
you're
if you get up in that 68.5, 69.5, I think you have to make some sales. Yeah.
Okay. Now, Dave in Howard, South Dakota, a place where, as we talk about transportation issues and everything else, South Dakota, North Dakota, of course, is going to be affected. He's curious, when will the markets take into consideration the late harvest? Crops around Iowa and even as you get farther north, still very, very green, he says. Do we expect much of a return on the market for a late harvest this year?
What difference does late harvest make? Who cares? I mean, it's a problem if it's your field and you're late, but that corn gets harvested. It's not like we're going to go out and light a match to it and burn it up and destroy it. It's going to be there. It might not be greatest quality, but it'll still be fed. That's why I smile and everybody talks about aflatoxin and all this kind of stuff. That corn doesn't get destroyed. It gets used somehow, some way.
Right.
Discounted for sure.
Producer takes a hit.
Yeah, but it gets used, and I view late harvest the same way. We're not going to, I mean, there might be some loss, but it's going to be, certainly in the big picture here, not enough to be real significant.
And I guess last year in 13, we were coming in with tight supplies from 12. The late harvest had an impact. This year, we've still got ample supplies coming into a harvest where we're seeing record southern harvest to begin with.
Correct.
Right. Not much of an impact.
Yep.
Now, Tom, before we let you go, we did see crude oil find some stability this week. Do you expect to see much change in crude as we get here into the winter?
The interesting thing about crude oil is that we really rallied that market up this summer in anticipation of the mess between Ukraine and Russia, over all the dust up in the Middle East. On, are they going to take over the oil fields in Iraq and all that? And all that seems to have faded away. The U.S. production is huge. Gasoline demand has sort of backed off. You've seen gasoline making new 10-month lows, I think we made this week. So as long as that's the case, I think crude's going to struggle. Plus, there were OPEC and a couple others came out with reports this week with some rather dismal economic outlooks for world economic demand. And all that, I think, is going to play to pressure and continue to pressure crude oil prices. Having said that, I would suspect that there's fairly good support on the October crude contract down when you get down around $90. I think that's going to attract some attention as we go into it. They're talking about a colder winter, so demand for demand for distillates for fuel oils should be strong. So I think support's going to be okay there. The gasoline market's a problem because everybody buys these new cars. They have better gas mileage. The economy's a little rough, so they're not driving those cars quite as much, and demand's a bit of a problem. And that could be a problem for the ethanol industry too, as you see ethanol stocks have been creeping up here because the blender demand's been down for that very reason. So those are a couple things to keep a close eye on as they relate directly to the farm.
You bet. Well, and some of us are still driving that 88 Chevy 2500 with a gas engine. We're doing what we can to burn through those stocks.
Keep supporting it.
Well, Tom, thanks for taking the time to be with us this weekend, and hope you have a great week.
All right. Thanks, Mike.
Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will continue to get expert analysis right to you. Thanks for watching, and have a great week.